Hi there, welcome to Nepi Invest. I thought it was time to give a bit of an update to Zuno. This is a company I've been following since October 2019 when they released a really good Appendix 4C, and that seemed to be an inflection point for this company. I think the share price was significantly lower than 10 cents, and then we saw the share price re rate from there to a significant level. I think the share price went from below 10 cents to about 80 cents in a short period of time. And that was pre COVID 19. So a lot of people think Zuno is only a COVID 19 company, but they did reach their inflection point and there was a re rating in the share price before COVID 19. However, the share price has slipped back all the way to 20 cents, significantly lower than the share price was before COVID 19. So I think the market is overreacting to the fact that the sales of their products have decreased over the past year, 18 months, after that peak in their sales during the first few months of COVID 19. So I think there is a potential, just at this point in time, potential opportunity here to buy Zuno at really good values. However, in saying that, the share price is still in a downtrend, still some negative sentiment in regards to the company, and we need the sentiment and the share price trend to shift before I become interested in this company. So definitely Zuno is on my watch list, and I am looking at every single Penny's 4C, every half year report. And as soon as I see a bit of a shift in sentiment, a bit of a shift in the trend of the share price, that would be the time to possibly take a position in this company. Zuno sells antimicrobial products, and you can just imagine antimicrobial products, why Zuno's products would be in high demand, particularly during the start of COVID 19 when there was maximum fear in regards to that virus. Zuno was founded in 2007 and there was a backdoor listing via Gold Search, May 2017. The managing director and founder is Paul Hyslop. I think he was a CEO, but they just hired a new CEO, which was announced on the 1st of April. So about 1 month ago. I think his last name was Walcott. But anyway, Paul Hyslop is a major shareholder of the company, 36.1% shares. So he definitely has a bit of a skin in the game there. One of the major shareholders is Regal Funds. They have 10.1% stake. Now, the last time I did a video of Zuno, which was in October 2021, the markup at that point in time was 76 million at a share price of 46 cents. So you can just see how far the share price has fallen since then. Share price has fallen from 46 cents to 20 cents. And at 20 cents, the markup of this company is 34 million. So even though I thought there was some good value at a share price of 46 cents, because of that negative sentiment and the share price in the downtrend, there was still some more to fall. So the share price could even fall further from here. It could fall to 10 cents, would give the market cap of this company 17 million, which would be ridiculous valuations for a company that is generating cash flow in their operations. And Zuno's markup, or ticker code, is ZNO. Now let's have a look at how this company is performing on a quarterly basis. But before we have a look at the most recent quarter, the March quarter of financial year 22, let's just go back 1 year ago. Now, all these results are in New Zealand dollars. This is a New Zealand-based company. I'm pretty sure they're still based in New Zealand. They definitely started in New Zealand. Anyway, Zuno in the March quarter of financial year 21 produced $6.8 million in receipts and was operational cash flow positive by 323,000. Now, they did spend a little bit of money in financing investing activities. That's why cash on hand actually fell $500,000. So what I always look at is operating cash flow. Then I look at the free cash flow, which takes into account capital expenditure, that sort of thing. And I want to see both eventually being positive. I want to see a company generate cash flow in their operations and in their overall business, because that is a very important inflection point for all companies. Not only do I want to see that on a quarterly basis, I want to see that on a consistent quarterly basis. So one-off does not mean much if the other 3 quarters are highly, of the financial year, are highly operational cash flow negative, free cash flow negative. I want to see quarter on quarter the company being operational cash flow positive and then free cash flow positive. But they did have $6.8 million of cash at the end of this particular quarter. So let's see how this company has progressed over the past year. I think one of the things about COVID-19 and Zuno products is a lot of companies, organizations, even households build up products of Zuno. And because you build up product, the demand for Zuno products probably was less in the next few quarters. And that's definitely true with Zuno over the past year. Receipts from customers down 2.3 million, but receipts are down 2.3 million, but so were product manufacturing and operating costs down 1.6 million, administration costs down 100,000. So overall, the company was operational cash flow positive in this quarter by 174,000. In the past 9 months, operational cash flow positive 429,000, and not spending a lot of money in financing and investing activities. That meant the cash on hand grew by $200,000. And we saw this company finish this particular quarter with $5.4 million of cash. As we take a look at the cash receipts history for Zuno, since they backdoored onto the ASX, it's definitely been a roller coaster ride for shareholders and the cash receipts over the past 2.5 years. If we go back to September quarter 2019, which I think was the inflection point for this company, they only received $1.2 million in receipts, but that was significantly higher than this company had received in the previous 2 years. But that was the first quarter that this company was operational cash flow positive. And that was the catalyst behind the re-rating in the share price from then until maybe 1 year later. But then we saw a bit of a decrease in receipts the next quarter, the December quarter 2019, down to 600,000. And then we saw an explosion in receipts because the demand for Zuno products went off the charts. It significantly increased. And we saw receipts rise to 9.9 million, then 19.8 million in the June quarter 2020. But ever since that June quarter, we've seen receipts decrease. But possibly receipts are leveling off now. We have seen a possible end to the decrease in receipts because the last 4 quarters, receipts have been quite volatile, up and down, but we'll say lumpy, but receipts haven't really seen a significant decrease. So we did see a decrease or a low in receipts of 2.9 million in the December quarter. That's risen to 4.6 million. So the last quarter or the March quarter receipts we've just seen, there was some positive signs that maybe this is the end of the decrease in receipts. We need confirmation that if we see receipts get above $5 million in the next quarter, that would be a bullish sign. That could be a sign that receipts have started back into a bit of an uptrend. And that's what I want to see for Zuno and their receipts. I want to see return to a bit of an upside, return to an uptrend in receipts. Now onto the chart for Zuno, and this is a pretty ugly looking chart if you ask me. Share price going from the top left to the bottom right. Many companies, not only in Australia, but also the NASDAQ, have very similar looking charts. To be honest with you, you don't want to be a shareholder during this period. There have been times you could have taken losses or maybe profits if you've been a long-term shareholder of this company. But I've included 2 moving averages on this, the 100-day and 50-day, and both moving averages are moving down. The 100-day moving average is above the 50-day moving average, and that just means the share price is in a well-defined downtrend. Not only that, whenever we see the share price rally to the 100-day moving average, which has happened 4 times over the past year, that's the time to sell, take losses, because the 100-day moving average has been a really good, strong resistance level for this company. We've seen it 4 times, as I mentioned. First time was in April, May last year. Second time was in July. Then we saw it again in January this year, and then again towards the end of March, early April. Share price moved towards a 100-day moving average, and then we saw the share price fall away straight from there. And what's happening there, it's all based off psychology. When shareholders, stale shareholders who bought in at high prices, see the share price rally, they see the opportunity to sell out of the company at higher prices than it was a few days before. And what we need to see for the share price to keep on rallying is more buyers coming in. And we just don't have those buyers coming in. And the other thing is, whenever Zuno releases a possible positive announcement, that's when we do see selling. And that's why I'm waiting for a long consolidation period. And what happens during a consolidation period where the share price just goes sideways? Those stale shareholders just become bored, and eventually they just sell the shares in that consolidation period. And then eventually all those stale shareholders who bought in at higher prices eventually get cleansed out of the system, and there's no resistance moving forward. And that's when the share price of a company can move forward, move up, with very little resistance. So I'm just waiting for a consolidation period for Zuno. Before then, they could actually release some good financial news, and that could be the catalyst for the shift in sentiment and for a new uptrend in the share price. So either I'm going to wait for a consolidation period or some good financial results from the company. And of course, I should have mentioned when I do look out for a consolidation period, then I'm going to be waiting for a breakout to the share price. And hopefully, when I do see a breakout in the share price from a long consolidation period, it coincides with some good financial news. It doesn't always coincide. Sometimes you see a share price starting to move in an uptrend before the release of good financial results. That's just the market anticipating the company will release some good results. So those are the things I'm waiting for: consolidation period, good financial numbers from the company, and that's when I might take a position in Zuno. If you have any questions about this company, or maybe any other company on the ASX, just leave in the comment section of this video. I might or might not be able to answer your questions depending on time restraints I have moving forward. Hope you've enjoyed this video. And the last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.